Good morning, I'm James Gruber. Welcome to the morning report for Wednesday, the 11th of March. It was a volatile night on markets as hostilities in the Middle East entered their 11th day. Crude oil prices tumbled after Donald Trump predicted the Iran war could soon end. Trump's remarks initially injected optimism into share markets, but that turned on events in Iran, where hardliners rallied behind the new supreme leader, and the Revolutionary Guard said a blockade of oil exports would continue until US and Israeli attacks end. Trump said the US would hit Iran much harder if it blocked exports, while US Defense Secretary Pete Hegseth said today would be the most intense day of strikes against Iran in the campaign so far. ASX futures are pointing to a 0.3% higher open after oil sank and US markets finished flat to slightly down. As for the ASX 200 yesterday, it closed 1.1% higher to 8,693 after Trump's comments about the war possibly finishing soon. The mining sub-index snapped a 5-session losing streak to advance 2%, with BHP and Rio Tinto climbing 2.3% and 0.6% respectively. Financials rose 1.3% in their best session in nearly 3 weeks. The energy sub-index declined 2.9% in its worst session since mid-September, a day after notching its all-time high. Oil and gas explorer Karoon Energy tanked 6.8%, its steepest drop since April. Santos and Woodside also slid 3.5% and 3.8% respectively. Meanwhile, a survey released yesterday showed that consumer inflation expectations have jumped to a 3-year high, cementing the concerns of RBA Governor Michelle Bullock that the Iran conflict could push up prices and wages. Weekly inflation expectations lifted 0.8 of a percentage point to 6.1%, the largest weekly rise since the ANZ Roy Morgan Consumer Confidence Survey began the measurement in 2010. Consumer confidence fell 3.7 points to 73.4, the weakest level since July 2023. Meanwhile, the CBA Wages Insight series showed wage growth eased in February to 0.7% for the quarter. This left the annual rate steady at 3.1%. Today, the ASX is likely to see a continued bounce back in the miners and downtrodden travel stocks, while energy stocks may retreat again. Moving to commodities and back to oil prices, they sank on Tuesday as President Trump predicted a Middle East de-escalation. Brent crude futures settled down 11% to $87.80 a barrel. Gold futures leapt on Tuesday from the pause in the US dollar rally. The futures settled up 2.7% to $5,242 an ounce. Base metal prices were higher on Tuesday on a softer US dollar. Copper futures were up 1.8%. Meanwhile, aluminium futures were 0.9% higher. Iron ore futures were slightly higher, up 0.3% to $103.22 a tonne. Let's look at currencies. The Aussie dollar was last trading up to 71.20 US cents on a lower US dollar. Let's take a step back to see how Wall Street and other world markets did. On Tuesday, the Dow Jones Index was 0.1% lower, the S&P 500 was down 0.2%, and the Nasdaq Index was flat. There are some developments worth highlighting. Wall Street mostly fell in choppy trading on Tuesday as investors initially took comfort from tumbling crude prices and expectations that the war could soon end, but intense airstrikes on Iran then gave them pause. Only 2 of the 11 S&P 500 sectors were higher, with communication services and information technology leading the way. Energy led the declines, down 1.4%. Chip makers were higher on Tuesday, with Nvidia up 1.1%, while SanDisk gained close to 5%. Travel stocks, which bore the brunt of the sell-off since the war started, were lower, with an index tracking passenger airlines down about 2.4%, while cruise companies Carnival and Royal Caribbean also lost 0.8% and 1.9% respectively. Bunge gained 1.1% after the agribusiness firm said it expects earnings to increase to at least $15 per share by 2030 and announced a new $3 billion share repurchase program. Health insurer Centene fell more than 16% despite reaffirming its 2026 profit forecast. US government bond yields were mixed on Tuesday. The US 10-year Treasury yield was up 2 points to 4.15%, while the US 2-year Treasury yield was flat at 3.59%. To the European markets, the continent-wide FTSE Euro First 300 index finished 1.9% higher, while the UK FTSE 100 index advanced 1.6%. European markets marked their biggest one-day jump since April last year on Tuesday, as global markets bet that US President Donald Trump would call off the war on Iran soon, lifting investor sentiment and sparking a broad-based rally. Bank stocks, which had been amongst the worst hit as a result of recent investor concerns, recovered 3.6%, led by HSBC and Santander. Industrials gained 2.8%, while travel and leisure stocks jumped 2.5% on prospects of flights and tourism returning to normal operations. Spain's financial heavy index outperformed major peers with a 3.1% rise, followed by the export heavy DAX in Germany. Both logged their steepest one-day gain since April 2025. So what are we watching out for today? Well, besides monitoring developments out in the Middle East, in Australia there are a host of ASX-listed companies that are going ex-dividend today, including Cleanaway Waste, Brambles and Breville. In the US, there are plenty of key economic data points this week, including inflation today and GDP figures on Friday. Earnings season is winding down with Stitch Fix, Bumble, Harmony Gold and Campbell's scheduled today. And that's it for today. For further developments on the local trading session, please tune into the CommSec Market Update podcast this afternoon and, of course, the Market Close video. Have a great day.